Thanks for staying with us. Now, despite what you have heard, it is not wise to close old credit card accounts, and paying off all debts doesn't or does not mean you have a perfect credit score. Debt is a way of life for 99% of adults. It is a necessity in today's economy where it's commonplace to be paying on credit card debt, student loans, mortgages, and so on. An affordable amount of debt helps individuals reach their goal and live comfortably. But if debt is unchecked or uncontrolled, it becomes a debilitating weight. Or debilitating weight rather. What are the things you fear most when you hear the word loan? And have you taken a loan before? And how did you pay back? Now, let us hear what you have to say. Remember, you can join the conversation, send us an SMS or WhatsApp to 081-803-84663. So I'm going to bring in our guest in a minute. Have you taken a loan before, Isi?
Oh, yes, I have. Especially when I was in the banking sector, I did take loads of loans.
Car loans.
Wow. Car loans, consumer loans, and, little soft
How did
loans.
you feel about it?
At the time, I was enjoying the money and spending it. I felt good because at least I think it was okay at the time. But in the course of paying back, you start to feel the pinch. And in the course of that, what do? You start saying, are you sure I should have taken this loan in the first place? And the interest rate, I think that's the part that actually, gets me, because as the year or the loan, the longer the loan, the more interest rate, the more interest you pay.
Yeah.
So, and if the market goes up, that's the amount you're supposed to pay at the end of the day. So I don't think, in fact, after I paid off my loan, I swore off loan, especially in Nigeria. So I wouldn't agree with that quote.
So you think it's a Nigerian thing, or it's you just?
In Nigeria, I don't think you should take loan. It's not a soft landing for me to take loan.
Okay.
I don't think so. But for mortgage, if it's some sort of liability, it's some sort of asset that you're actually asset that you're trying to purchase. Yes, you can take a loan because you can see it. But for liabilities.
Oh, like you took a loan for liabilities?
Yes, for cars. I say soft loans,
Auntie, you're questioning her. Is it your place to question her, or is it me that will question you? What loan have you taken?
Me, what's not the time you lost? Well, I haven't, and it's interesting you mentioned mortgage, and of course, like our guest to touch on the difference between mortgage and loans. I don't know. Today, I really want to learn. I was telling you behind the scene that I have heard people talk about how loans should be a way of life. Of course, it has to be done deliberately and done with a level of discipline as well. So I really want to understand that space. And with the number of loan availability in Nigeria at the moment over the past 24 months, there is one we used to listen to every time. There is no shame in borrowing. Okay. So yeah.
There's no shame in borrowing. So for me, I think I have done loans, especially because as a businesswoman, when I was trying to scale my business, it was consistent. Every 9 months, I take 5 million naira. I had an overdraft of 5 million naira every 9 months. You pay back and you just did. It's just almost like auto renewal, especially with then Diamond Bank. I don't know what they're doing now with the merger, but it was 5 million naira every month. They check my stock. So stock serves as the collateral and all of that. So it was a recycling situation where I'm able to do that overdraft of 5 million naira. Of course, I got credit cards as well, But I realized that, and this is where I'm even going to come in, asking my guests, when inflation started happening, because I would understand where EC is coming from. The business terrain in Nigeria, too many fluctuations. You can't predict. So you can't say, okay, it's too volatile. That's the word. You can't predict this is where I will be in the next 2-3 months, because anything can just happen. Policies will change, and it completely. So the loan that you probably took at 5 million, you probably will be paying it almost maybe double that amount.
Exactly.
So that volatility of the economy is where, I now realize that, so as the last one I took was in probably 2017, and I stopped, because it was almost like every year I was renewing it every year, but I stopped because sales had dropped. The buying power for customers was not as high as it was before. I think it was Buhari's government that started it, that I stopped. But, you know, when the economy was booming, it was easy for me to, you know, to take the loans because I know that.
And you saw the impact on your business.
Yes, of course, it built my business. Worst case scenario, if I make a sale turnover of this, I'll be able to take out of that to do the monthly rentals, you know. So those were what I was able to, plan around. But with the situation of the volatility and everything that happened, I just said, you know what, at the trajectory that the economy was going, I think I needed to slow down so I don't put myself under undue pressure.
Yeah,
exactly. You know, but I'm going to bring in our guest. Didi is a marketing strategist interested in how human behavior shapes strategy and drives business growth. She currently heads the marketing function at TeamApt, Nigeria's leading agency banking operator, where she finds or helps find insight and narrative based on day-to-day interactions with financially underserved communities. And she's joined us live in studio. Hi, Didi.
Hey, how are you?
So I saw you nodding and smiling, you know. So, I mean, you heard our banter on this topic. The truth is, I'm not afraid of loans because I always believe that great businesses, I mean, Dangote, if they show you a loan portfolio, you go wrong, you know. Great businesses that want to scale, that want to build, you must, you know, at some point decide, you know what, I want to take on certain kinds of loans, right? But I realize that there's usually a fear around loans. Okay, take for instance, I had my husband had a partner, or no, a boss that was going to get him to do some work for him, and this guy had access to an overdraft of 700, if I'm correct, 700 million naira as at that time. These, I'm talking 2014, 2015. He had access to overdraft of 400 million because they were doing, 700 million because they were doing oil and gas business. But the man blatantly did not touch that money because he was just too afraid of, I don't know, he was afraid of the loan. So why do we have the fear, first of all? Why do we have that fear of taking on loans when we know that loans are an integral part for growth, especially in any business or any human being?
Okay, hi, it's lovely to be here. I would say it's a stigma, like a lot of stigmas we have in Nigeria, and where we are less literate, we tend to just, through some traditional means of sort of information that we pass on amongst ourselves, we just tend to pass on this information and say, oh, okay, here, loans are stuff you shouldn't have. Also, because Nigeria doesn't have a good credit system, what has then happened is banks and certain organizations are wary of giving people loans. And when you give people loans, you put this super high interest rate so that you can at least, the money you make in the first 2 months might make up for the time when the person stops paying. And so with people that have experienced this and have not been able to pay over time, it's like, oh, I'm not doing this. And I remember just doing some research sometime. I was in Ikorodu and I was talking to people, oh, hey, we could give you loans. And they're just like, God forbid. And I'm like, what do you mean by God forbid? We're trying to help you. But it's one of those things as well. Think of when you tell Nigerians to get insurance and they're like, God forbid.
I can never die.
Exactly. Or stuff like,
are you planning for me to die?
Stuff like my car is covered by the blood of Jesus. And while it's covered, no problem, but he's giving us wisdom to do things like this, right? And so it's the same thing where when you tell somebody, oh, take a loan, they feel like, are you trying to say I'm going to be in debt? And being in debt is something we view as bad. But when you look at developed societies, a society cannot grow without credit. It's like a wheel, yeah, where you see, if a business, like you said, right, a business gets more money, they can ramp up production at a very good rate, by the way. Like she said, in Nigeria, your rates are super high, so it does not exactly benefit you in the long run. But you get credit, and then when you get credit, you ramp up production, you can employ more people, and then you sell more. You sell more, that money can go back into the bank can give people, and it's just like a circle, and then people have more disposable income, so they can save in the bank has money stored, so they can give people, and the economy just keeps going, it just keeps getting better and better, and the GDP keeps increasing. So when you see how credit essentially helps people, or helps a society just ramp up production, and production is what you need to do better, right? Production is what you need to get better, but it's a stigma, and I know that we've had a number of initiatives to help people understand why it should be better. Why I really like, I know everybody speaks badly of this government, but what I really like what CBN has done in the past few years is introduce some financial inclusion framework that helps people get licenses easily to give loans. And of course, some of these guys...
Oh, that's fantastic.
Exactly.
Yeah,
so some of these guys are not the best. Of course, we know the ones that send text messages to people. But then they are the ones who really help with small yeah, you need...
You know the interesting thing, sorry, I will let you come in, Elsie. The interesting thing, Didi, is that these small loans are the people that pay money back. My anger with these banks is that businesses like me, that probably, the max I can need, probably 20 million naira. They will not give me money. They would rather go and give somebody 2 billion that they will be chasing, and that's why they now have a lot of bad debt. You know,
yeah.
If you look at payment rates, first of all, women pay their loans better. Yes. The statistics shows, so all those men, don't argue that one with us. Women pay their loans better. Then secondly, small businesses pay back their loans better than all these big companies. So is it not wisdom for these people to channel the loans to small businesses and pump it up more, because they are even the employers of labor. Exactly. SMEs are the employers of labor. So why are we not having to push, and you not tell the person, go and bring your oblique cord, go and bring your this, some kind of unrealistic collaterals that do not work. You know, so it's actually very tiring. So when people see these things, they just shy away from it. I mean, Bank of Industry, for instance, say that they have billions of naira that is for female businesses and all of that. A lot of women that I pushed there, they're asking them for land, they're asking them for collateral. They don't have all these things.
I tried to take
we
a
already
loan.
have all of these things.
I tried to take a loan once, and they said my loan has to be, it was some ridiculous thing, my loan has to be, is it half of my salary or something? And I'm like, if it's half of my salary, then why am I collecting the loan? Like, it should be more, right? So I generally, it's just how our system is structured, where our infrastructure is terrible on a lot of levels, including banking. And what we've done is, the banking system is built to be wholesale. It's not built for people like, so with the new digital banks, exactly. So we're democratizing that process, and we're making it for people like yourselves and I. But banking, as traditional banking as it is made for the Dangote. It's not for, it's wholesale. Meaning,
when I brought this topic,
you need to do a refinery. You need to solve this big problem. Take this 10 billion, because obviously it's one of those things where then another bank comes to buy that loan of you, and they make money from this. To be honest, we think they don't, but they make a lot of money, and that's how they would rather make their money. It's the way they're structured. It's not thing that. It's not fundamental to anything. It's just the way they're structured.
Okay. I want us to break this conversation down. Let's understand the pros for businesses and then for individuals. Because the one I mentioned, I say no shame in borrowing and all that. It's a lot of it are targeted to individuals, not necessarily businesses. The ones that are given to businesses are very clear to say our business is for small and medium enterprise, right? So what is the difference, and what should we as a people understand in trying to sort of take away this myth and stigma you're talking about?
So I like to look at money in 4 ways, how money is used, right? First, it's a transfer of value. So I need your pen and you're going to sell it to me. I need to pay you for it. That's one use of money, right? Second is meeting goals. You need to pay your rent. You need to pay school fees. Third is liquidity. Just every day you need to spend, you need to buy tomatoes, you need to do this every day. You need to have money. And then fourth is resilience. You're just driving in Lagos, somebody bashes your car. You didn't plan for that. You need money. You get in an accident, you need money, stuff like that. So you start seeing that those are 4 key ways in which we use money. There are these guys called EFINA that do surveys every year, and they realize that based on this need framework, 1 in 4 Nigerians are financially healthy, meaning 75% of us cannot meet those needs I just mentioned. People cannot eat, people cannot pay for stuff. And so you begin to see how, if this was a developed society, people should be able to get credit to solve these problems. And that's why individuals need loans. That's why individuals need access to credit. So if I need to pay for this pen, I can buy and pay later. There are a number of startups that are trying to do that. If I need to, if something happens to my car, I can solve it without having any issues. The challenge, though, then, which is where your question is tailored to, is what kind of loan should we take as people? That's where you have good debt and bad debt, which is exactly what she said. You want to take debt for stuff that's where you can multiply it
and make more money.
Exactly. And like you said, if the business is not working, then you withdraw and you don't take. But generally it is, you want to take debt for stuff that's, but actually even finance tells you that you can take debt to pay off debt in a normal situation.
You know what, let's
Robbing
hold that
Peter
thought.
to pay Paul.
Let's hold that thought. Let's take a very short break. We'll be right back. All right, if you just tuned in, we are having an amazing chat with Edidiong, you can call her Didi for short, on financial literacy, the myth, the fact, and about loans and debt. So let us hear what you have to say. Remember, you can join the conversation, send us an SMS or WhatsApp to 081-803-8463. Before I come to EC, I was just going to quickly say that personal loans are they not tied to people that earn salaries? Because I've not heard any personal loan that is tied to people that are just probably business people.
Oh no, there are loads of companies that give to just business people.
Awesome.
You need to show that your business exists. There's an inflow and stuff. So you even have a few startups now that allow you just pass your invoices through their system, and so you can take over business overdrafts the minute you need it.
Awesome. Okay, easy.
Okay, I was also going to ask you the question about credit cards, the difference between credit cards and loans, because most times people feel that, oh, I have a credit card, but I think the monies in that credit card or the interest rate in the credit card is just as taking a loan. So can you demystify that concept for us, one, and two, what is the right decision you have to make as an individual to pick the kind of loan between your loan budget and the kind of loan you want to take? Basically, I want to take a loan, for example, and I do not have a clear vision of the kind of loan I want to take. So it's also based on my budget. Okay, so what is the kind of what's the right loan to take as an individual?
Okay, so disclaimer, I'm not a financial analyst, just somebody that works in that space.
Okay.
So on your first question about credit cards essentially are cards that help you build credit scores over time. In a system that works, you want to have a good credit score so that you'll be able to give out credit, right? That's the aim. An organized society wants to give out credit over time, and to be able to do that, you want an easy way to always know that this person is credit worthy, so you give out credit cards. And then the reason people then use credit cards is, first, the value of money today is more important than the value of money tomorrow. Meaning, how much if I buy this phone for 600,000 naira, tomorrow it's
800.
largely, exactly, because then there's inflation and there's all of this stuff that's happened to it. So my money, it makes sense for me to take money, put it in a million things that could earn me more money.
Precisely.
And then so you mentioned mortgage last time. You take money, and then over time you can then start paying off stuff.
Yeah.
With the hope that you are making more money to be able to pay stuff. So to your second question, which is about, and so, okay, sorry, just to finish the first one about credit. So, so credit cards are essentially some sort of structured loans that your bank gives you already. So you have access to it, and you have to pay back each time, and every month you have to ensure that you don't go past your credit limit, and you pay off every month. Now, with making those decisions, you want to make sure that, first, you're not taking it for frivolous reasons. So you shouldn't be taking a loan to
Travel.
To shop.
God, it's hard to travel. But yes, you shouldn't be taking you shouldn't be taking a loan to travel. You shouldn't be taking a loan to shop. You shouldn't be taking a loan to buy a car. Things like that. However, in a society where there's a good credit system, you should be able to take that on credit. I don't know how to put, there's a difference between taking stuff on credit and taking a loan, because with a loan, you are taking, say, 10 million naira at some ridiculous interest rate to pay off something. But you're taking stuff on credit, and then you're paying every month. You're paying every month. Remember,
payments,
exactly.
But
So
you can still do that with a loan.
There's an interest with that.
With a loan, you are paying them back every month.
Okay.
And remember, your car is getting into bumps, and you're fixing your car, you're spending money fixing your car, you're doing this at the same time. But in a credit system that works, you've taken that car, and then you're paying them back every month. And that's sort of how credit system works. So if someone is going to buy a car, I'd rather you buy a car on credit, not go and borrow money elsewhere, take that money and buy, because there's stuff around the value of money and how you want to ensure that you are not just you're not taking money and spending it on things that are just going to go bust.
So I'm going to come to, because I know that there are loads of companies, for instance, when some electronic companies started in Nigeria, they were always giving to salary earners. You go there, I think they still do it up till now. You go there, buy all your household equipment, your ACs, your fridges and everything. You split your checks, I think in 6 months, and you just be dropping your checks. So that actually buffers, instead of spending the money all at once, you can just go and take, that's some level of loan. You can go there and just take the product and give post-dated checks for the period of time. So a lot of companies do that, and I think some travel companies are already beginning to do that as well. If you want to travel, you can just make a small deposit and you pay over time, or you can start building from January to when your trip is done. I was going to ask that if you are in a volatile environment like Nigeria, where inflation just goes up and down and all of that, and you have like a credit card running or something, how do you go back to your banks to renegotiate, certain kinds of, because it's almost traumatic when you see how much you are paying, if they give you your books and you see how much you're paying. And I think, again, this is why a lot of people run away from loans. It's like you are just walking and somebody else is shopping. This kind of situation of they walk, somebody else is eating the money. It's like I'm working for someone. I don't have that breathing space anymore. If I'm earning 100,000 every month and I have to pay back maybe like 90,000, I only have 10,000 to myself, what's the point? I'd rather not just stay away from the loan and keep my 100,000 to myself, not putting in mind that maybe as at the time you took that 1 million naira, it had helped boost a lot of things for you as a person. So how do you go back to renegotiate bad loans? Or maybe if there are inflations and all of that, you go back to say, are there opportunities for you to be able to speak to your creditors to say, this is where I am, how do we rework it so that it is not too much of a burden for me?
And a lot of times a contract is a contract. You're largely and hardly ever, because don't forget that even on their end, it's business, and they've sort of already calculated that and said, even their own inflation is inflating. So it's super difficult, and that's why when you try to do, there's something called cost of funds. You're about to invest in something, you're about to spend that money over a period of time. You then have to factor in inflation. What does it mean? What's the value of this money tomorrow and the next day and the next day and the next day? So you have to do that calculation. I think that's why it's super important for small businesses to partner with financial people. Always have an accounting person on your side, so that you are making the right business decisions and you're not just taking loans because they're available to you. I think loans are one thing that, yes, you can take it, but spend a lot of time, read every single line. Every single line.
Talking about the loans being available, I mean, while we started, I think I mentioned that for the past 12 or 24 months, I've noticed that loans are pretty accessible for personal use as well as small businesses, for those who have decided to say they want to try it out, right? And I want to understand what you think is happening in that space in terms of the influx of these people. You've mentioned that CBN has made it easy for people to get a license, right? But for the traditional houses as well, they have these stringent collaterals that they demand for, like the ones that Uwa has mentioned. You have to have a landed property, a house document or something for them to be able. And that is to say that they want to be sure that they can get their money back, right? So how are these people getting their money back? If a lot of fintechs and startups are just able to just give this money and taking a huge risk in terms of putting their monies out there, how is that playing out for the economy and for the businesses that are going into that area at this point?
Okay, so I like to say that it's the traditional businesses and the fintechs are sort of targeting two types of people. And you've been speaking about there's no shade be borrowing, and those guys are essentially trying to change that stigma. So don't forget, when you see that, they're mostly trying to talk to people that already don't even take loans, and so their point is, okay, yes, you can take some loan from us. And how's that playing out generally? Was that your question? I feel like
how is that playing out in the business space? How are they able to get their monies back and be sure that they're getting it if the collateral is not as serious as the traditional? So
most of them, first they get your details, thankful to CBN and the BVN. So BVN allows you see across everybody's accounts. There was something that happened at work once and people didn't want to pay back. And all CBN had to do was put a lien on all of their accounts. Shepi, you get money into another bank, we'll collect it back. So that is helping these fintechs. That's the first one. Secondly, once you go into this thing, you know that there's going to be a level of default. That's why they don't give beyond a particular amount. So first, you'd find there's no shame in borrowing, guys. They study you. First, you have to be an active user. And then they study you. And they start with like, a 5K overdraft, a 10K. Although Nigerians will take when it gets to the big amount, that's when they run away.
I have somebody, she's not my friend.
You wanted to call her friend.
She took credit card. Now Canada she did now. She didn't pay that money back. I mean, this particular bank had a lot of major losses. Because they were actually targeting to build small businesses, but I don't think they did their due diligence well. But you even see, because part of why there's a lot of default, you see us moving to 1 digit, then I'll come to EC. The 1 digit, I mean, if you go to France, 3%, just kind of nice percentage. Even these you people say, Oga Dangote, most of his loans is foreign loans he collects, because the what's it called, the interest, what's the word? That's the interest now. It's cheap, the percentage. 1 digit loan, single digits is not a double digit loan that you're taking. So it's cheaper for them to actually take loans abroad. So do you see Nigeria getting to that point where the loan interest would be cheaper?
The same way we're waiting for a couple of things to happen, but it's going to take a long time, because you want to be able to trace people. Like you said, that lady's abroad, right? You want to be able to know that this person has gotten a loan. If she gets to the airport, she cannot leave the country. Certain things like that. You want a system that works 360. So it's going to take us a long time. But more importantly, we need to build that credit system that ensures that first we know this person is worthy, this person is creditworthy. We need to be able to find people. People need to be a bit more obviously truthful about where they live and stuff like that, because now you do KYC tomorrow.
I guess that's where NIN is coming from.
Yes, a number of, we're obviously not doing it the best way, because then we're having fragmented means of identification. But once we have stuff that's an essential database, so what we also have now is we're trying to build a credit system, right? But everybody's trying to build it differently. So you have the different startups. So
where I say collaboration.
Exactly. So people need to come together and build one central credit. We have a credit bureau, by the way, that everyone is supposed to submit stuff to. So likely, if you've ever taken a loan, our data is there. But is that data updated? I'm not sure. So we need to constantly, once we get to that point where everybody has some sort of score, system, and then the person is trying to jackpot already, it's like red. You can't leave this country. You need to report. Someone told me once that he wants to take a loan. He's going to school, wants to take a salary loan from GT Bank. I'm like, how would you pay back? You're not working anymore. It's like GT Bank will know. You don't do stuff like that. So we, as a people, we're not serious people. We're constantly trying to see how to beat the system. And to be honest, a lot of societies that are where they are had to bring in stringent rules. They will catch you. So once we get to that point where we will catch you, then things would be better.
Okay, let's look at it from the perspective of, I know of a popular blogger who actually tried to get a loan from a bank. She went to different banks to get a loan to, boost her business and, help her business grow. But in the course of her going there, they refused to even listen to her or give her audience in the course of it. And by the time she had made a name for herself, these same banks are the ones now offering the loans, even at higher rates to her.
Lower rates, probably.
Lower rates, pardon me. And higher monies. I was going to say the amount was higher. And she was now the one actually turning down these people. Where am I coming from this angle? What do these banks stand to gain? Shouldn't they actually aid the small business to grow, or aid the blogger when she was trying to?
That's the ideal Nigerian.
I told you that they are wholesalers, so you know what they want? They want to seize our house.
So no, that aside from that, okay, they want to seize her house after she has already made the name. And
this is using too much English. They wait for you to blow before they invest in you. They are not willing to see that, okay, this brand is going somewhere when the person is a startup. You understand? Okay. That's what she's saying. You know, they waited for her to build a big brand. Now they are now the ones running after her
to give her. So
exactly.
So they stand
it's the same
like I said,
they rather give big rich people, all these top people money instead of giving the small businesses that would build it,
because they're not in business for the small businesses.
And in this case, she's not getting any collateral in the process too. She's not giving them any collateral.
But they know where she lives, and she's not leaving that Banana Island house anytime soon. So they know, like, they have this. And that's the truth. These guys have more at stake. So you can say they are giving our Oga 1 million loans, but they have 1 million things in your faces that they can find if they decide to get it, and that they can collect. So really, they don't want to start chasing. So if I decide to leave Scotland, they might not find me anymore.
So in general, will you say that to get a loan from these organizations is it's not good at the end of the day, bottom line?
No, of course. Like, I wouldn't say it's not good. I would say that if you're going to get a loan from an institution, first you want to ensure that you are going to make more money from that loan over time, or it's an investment that would turn out right for you. So possibly you're going to school, and when you get out, you're going to earn more money and things like that. Also, you want to be sure that the rates are super good. You also want to be sure that you're doing it for the right reasons. You're not doing it for frivolous reasons. I wouldn't say that. And then now what we have is, so another reason banks are expensive with a lot of things they do. Their infrastructure is expensive. To build a bank is expensive. And so things have to be expensive. But what you then have with the rise of digital institutions, and that's why they can give you lower loans. They don't have branch managers sitting somewhere collecting like a lot of money.
And they're not
it's super, exactly, so it's super asset light. And then obviously their spend is less.
So they are pushing more of their funds to the...
Exactly, and they're not focused on profits. They're focused on investments from the outside, and so they can then let a number of things happen. And so I would say right now the beauty of it is this fintechs have come to help the middle class get loans now. So the middle class can get loans. Still, we have to be super careful, take it for the right reasons, but we can get loans. And obviously the traditional banks are waking up. So you would see the people.
You'll be offering me 300 every day. Every day I'm going to get
So they are waking up now.
Loan. They are waking up. God, you know you are qualified for 300.
I get that.
As I hear you, I'm coming. You know, but somebody keeps calling, or they've been calling this number. Please, we do not take calls from this number. You just send your WhatsApp, or I think we have a message, Elsie.
Okay.
Send your SMS or WhatsApp. We do not take calls on this number, please. Okay. Come on, let me read the message.
Okay, so this one from Ade. Ade is from UK, right? Says, good evening, ladies. Why are banks not happy with customer that uses his or her credit? Try paying up the balance before the next billing statement is generated and no interest to pay. I see this as a clever, smart idea. I'm not sure.
I get that.
That's if you get...
Read it again.
That's okay. What he's trying to say is, if you collect loan immediately, try and pay off that loan before your interest rate starts to read.
They don't like
so
it.
That way it is a smarter way to, you know,
so that's how I do my credit cards. You know, I had a friend of mine that was in the bank then. So there's a particular date, you know, there's a period. Yeah. So once you make sure you move back the funds in, you do not pay anything.
Well, of course, they won't like it now because they won't make money now.
You know, but you at some point you begin to default because maybe the money you were expecting did not come in on time and all that. But if you are able to, credit cards are actually very good if you know the timing and you're able to manage to know that window. So at some point I will even say, please just give me this 100K first. Let me just credit the card. Then when it's done, I take it out and I return it back to you. So credit cards are easier to manage.
Yes. If I have to give my 2 cents on this, I would say that if you have cash flow, okay, you can take loan. That is, you're sure of the cash flow you're expecting. It's okay to take loan. But if you're not sure of it, because anything can happen, even if you're working in a bank, anything can happen. I mean, it happened to me.
Okay,
so you can actually, take if you're sure of your cash flow, you can take a loan. But if you're not sure of it, please abstain from taking a loan.
That's good evening. Your show is always educative and entertaining. I would like you to upload all the episodes of Ways on YouTube so that it can be watched anytime in case one misses the show. Okay, thank you, whoever you are. It's actually on Plus TV. Just go to the Plus TV lifestyle page. Click on playlist. You would go down, you see Ways, you see all the shows are uploaded. But thank you so much. I wanted to read the message. You are aware that you can still access up to 300K for
I'm sure I haven't. I delete it.
We all the time. But if you had one final thing to say to anybody that is looking to probably expand business in a minute, in seconds, what would you say?
I would say, same thing I said, if you're a business, please get a friend, anybody who understands finances really well, and talk to an organization with very good interest rates. Be very clear that the business you are engaging with is not spoiling tomorrow.
Fintech or traditional banks?
Please, fintech, please.
Fintech, please.
Team Fintech. Even me, I'm joining you people now. But thank you so much. I think we've had an amazing conversation. Thank you, Isi. Thank you, Elsie Godwin. All right, before we go, do ensure you follow us on Instagram at PlusTvAfrica. You can interact with us further. More importantly, we're planning to give away to say thank you to you for believing in the Ways brand. So do well to follow us now. Follow us now. It's at PlusTvAfrica. Like, share, comment, and invite your family and friends to follow the conversation. If you missed today's quote, here it is again. I love that you want to use your debit card, but to keep your credit scores solid, you still need to keep a few credit cards and use them at least once every few months. Very, very important. I actually have very good credit, so I didn't mention. Do you know that after gathering my points, I used it to buy generator, some household appliances with my credit card?
Nice. Oh, well, let's
correct. See you guys tomorrow as we bring another great conversation to your screen.
Bye.